Hi guys, welcome to the account. In the previous video, we discussed the basics of accounting. Basically, we defined accounting and we discussed the difference between financial accounting and management accounting. We also discussed that the management accounting is for internal purposes, for management use, and the financial accounting or financial reporting is for external users. Now we'll see who are those users, external users. First of all, the major ones, investors and potential investors. Investors and potential investors are basically the existing owners, shareholders. They want to see how their business is doing, whether it is making good profits, adding value to their investments, increasing in assets. This report will tell them all that, and they can also see whether they are going to get dividends this year because it will depend on the profits of the company and now of course the strategy of the company as well. But uh, strategy should be supported with the performance as well. If results are good, then they could go for dividends as well. And potential investors also always keep on analyzing the financial reports of different big companies, and if the performance is good, they have good assets and earning good profits, they would definitely like to invest in this business. So we call it potential investors. Then we have employees. Why employees are interested in the financial report? Because if company is making good profits, they can expect pay rise, job security, bonus, and on the other hand, if the company is making big losses, increasing current liabilities, and they don't have enough current assets, then the employees from this report, they can see that they need to update their CV and LinkedIn profile and see the recruitment sites. So that's why this report is important for them. Lenders, mainly the banks, these financial statements tell them how the company is doing, whether they can in future repay their loan or keep on servicing their debts. They can see from this results for the year and statement of financial position. They can get this report and analyze and see if they can get repayment and their basically loans are safe, repayment and interest. Basically, I'm trying to tell you what are their interests, repayment and interest payment. And then we have suppliers. Suppliers keep on giving us products and services on credit as well. And if we are not doing good, we are not making good profits and don't have sufficient assets to back these things. And in worst case scenario, if we can't pay, they will be in crisis. If we go bankrupt or we don't have enough funds to pay their due amounts, they will have problem. So this report will tell them how good or bad their customers are doing because we are customers for them. Then we have customers. Why customers are interested in a financial report? Because this report will tell them that we are good. If we are making good profits, expanding our operations, they might need to expand just to meet our requirements. So they will they can see the good opportunities in our expansion. So they need to keep an eye on their customers as well. So in that case, this financial report is very much valuable for them as well. And then we have government. Government on broad scenario, big picture, they have to make policies for the whole economy. So these financial reports, they can see and analyze, and you can see, foresee how much profits, how much tax they are going to collect, and what kind of policies they should make for the companies to perform better in future and help them and estimate their income. So basically, they estimate tax and financial policies. Based on these financials for the year, at least for the big companies, if they see a couple of financial statements, they can see what kind of policies they need to make. And then we have the public. Why public is interested in a financial report? Because some ethical people, they don't associate themselves with the companies who are leaving big bad impact on the environment and not very good with their employees, or they are not contributing to their economy, their local economy, to the extent they should be. Because if you have a big corporation, you can add, you can provide job opportunities to big community, local community, and if you are hiring from outside, they might not be that interested. So, and the major important factor they are considering is the environmental impact. So some companies are, many big companies are now adding voluntary reports along with these these annual financials. They add social responsibility reports just to make the public happy that they are doing good for the environment. So these are the major, you can say, users of financial report. So management report is for the management to run the business, and this financial report is for these users. So now we have idea or clear concept about the users. Now another topic that we need to understand, which is types of entity. If you are going to start a business, what type of entity you can create? What are the options? First of all, the easiest form. The easiest and the simplest form is sole trader. You don't need to meet many formalities. This is the simplest form. Go get a job and start selling and buying. Simplest form of business. And whatever profit, you are the owner and you are managing it, you are doing everything. There is no distinction between owner and the business. Whatever the business owes or owns, it is the owner. It belongs to the owner. So there is no distinction between, no distinction between the owner and the business. All profits, work hard, earn as much as you can, and all profits belong to the owner. You don't need to share it with anyone. Whatever you earn is yours. The most important thing, actually, the point that should come for everything is unlimited liability. Unlimited liability, like I said, all profits, whatever they earn, unlimited profits, whatever the sole trader earns belongs to him. In the same way, his liability is also unlimited. If business has big liabilities and it goes bankrupt, business cannot cover it. The creditors or the lenders, they can come and sell sole traders house and vehicle, personal property, whatever they have to pay. There is no limitation on the liability. Simplest form in a way, because you can add capital, increase capital, decrease capital by through drawings, no restriction. And then we have partnerships. Partnership is same like sole trader, no distinction between the owner and the business. Unlimited liability. Whatever they earn, they will take home. They will share it between them, and the difference, major difference is more than one person. This point again should come in the beginning. More than one person in business. Whatever they earn, they will take home, and if they have big liabilities and business cannot cover it, they are personally liable. Jointly and severally. Jointly and severally means, this is a local term, but for just your knowledge, that I mean, if they are all uh, bank, they close this business, business is dissolved, they are trying to pay, and business cannot cover all the liabilities or to pay the lenders, they will have to pay for from their personal pocket. If they are all there, all the two, three partners, all are there, they will jointly repay. They are jointly liable. But if two of them they go abroad and one is caught, the one who is caught, he will pay all that. So this is basically jointly and severally responsible. They whatever they earn, their share of profit goes in their current account. The main capital account stays the same, but whatever profits they earn through the year or retained profits, they go in their separate current account. If they draw some money, they take out something that is deducted from their current account. That's how it works. And then we have something different from these two is limited liability company. This is this has a big difference, because for that, to get this status, limited liability company, you need to go for incorporation. You need to fulfill all the requirements which are required to create a company, get it registered with the registrar. Mm, But then you are safeguarded. You have limited liability, meaning if you have shareholding of for $100,000, your liability is limited to that amount. Even if that business goes bankrupt and it has liabilities and lending loans in billions, you don't need to worry. You personally are not responsible. So your liability is limited. Limited liability. Limited if I Limited liability means if I invested $100,000, only that is the amount I can lose, not more than that. Limited liability, and then this company, This business and the owners, they are same, no distinction. They are same, one and the same thing. But here we have a difference. Company is separate legal entity. Whatever company owes, it has billions of dollars in loan. The company is responsible. Shareholders are their responsibility is limited to their shareholding, so they don't need to worry. Management and the ownership is different. There is difference distinction between owners and management. Of course, owners can become managers if they become director, but mostly directors are different. They run the business hired by the selected by the owners, shareholders, and management basically goes in there. The director's hand and the owner are safe from legal liability. So this is separate legal entity, like a person, separate legal person. So how? What are the differences? Because here you cannot add capital whenever you want. Although in public limited companies you can sell your shares whenever you want, but you cannot increase capital whenever you, I mean, if you wish to. So those are the differences. Then you have to meet many legal formalities that is in law exam that you need to submit financial reports and company constitutional documents, all those things. But if you if you're gonna start up from this sole trader, I think this is the easiest form, simplest. When you grow up, you can make a partnership or limited liability, whatever you want. So these are the types of legal entity. So this is enough for this video, and we'll discuss the elements of financial statements in the next video, and then we'll go for recording. Thanks. Thank you so much for watching.